The Morningstar rating system is one of the most popular tools that investors use to determine how good an investment fund is. However, many investors are unaware of the pitfalls of these Morningstar ratings, putting their money in great danger. Picking mutual funds based solely on their Morningstar ratings is like picking lottery numbers based on which ones won before. In both cases, the past winners are not guaranteed to win again in the future. First off, what are these Morningstar ratings? You can think of them like your school report card, in which you're given a grade for how well you did on your exams, essays, and so on. At the end of every month, Morningstar, an investment research firm, calculates and updates Morningstar ratings or star ratings for funds that are at least 3 years old. These ratings range from 1 to 5 stars, 1 being the worst and 5 being the best. They show you how well a fund has performed compared to other funds in the same Morningstar category. If a fund has a high star rating, 4 or 5 stars, its past performance was better than most of the other funds in the same category. The star rating also accounts for how much risk a fund took to get its return. In fact, if two funds get the same return, the riskier fund will usually receive a lower rating than the safer fund. To illustrate why you shouldn't rely on Morningstar ratings to pick funds, let's say you're placing a bet on which team is going to win the league championship. You only know what the past win-loss ratio is for every team and nothing else. Are the teams with the highest win-loss ratios in the previous years guaranteed to make the semifinals this year? Absolutely not. How about the championship team from last year? Is it guaranteed that same team will win again this year? Of course not. The teams that did better in the previous years might indicate a possibility that they will do well again this year, but it's not guaranteed. Players can get injured, traded, coaches can quit or be fired, and so on. The same applies for funds and their Morningstar ratings. Just because they received 5 stars for their past performance does not mean they will do well in the future. Factors like market conditions and fund managers can change. If you think 5-star funds will consistently beat the market, you're in for a big surprise. Numerous studies have proved that 5-star funds do not maintain their high performance in the long term. In 2010, the Wall Street Journal published an article titled "Investors Caught with Stars in Their Eyes." It looked at the 5-star funds from 1999 to 2009. In 1999, there were 248 stock funds with 5-star ratings. But guess how many of those kept that rank after 10 years? 4. In 2002, Morningstar changed how it rated funds, but this did not make a massive difference. The Wall Street Journal published another article in 2014 titled "Mutual Funds 5-Star Curse." There were 403 5-star funds on July 2004, but only 14% maintained that rating after 10 years. Still not convinced? In 2017, Wall Street Journal released an article titled "The Morningstar Mirage," which reviewed the performance of thousands of funds going back to 2003 after Morningstar updated its rating system. The graph provided shows the long-term performance of funds with different ratings. Most of the 5-star funds that attracted so many investors to begin with failed to perform at a high level over the 10 years. Do you see how high past performance does not guarantee high future performance? Just because the funds got 5 stars for past performance does not mean they will perform at the same level in the future. That's not to say Morningstar ratings are completely useless. They can still be used, but they should not be the only factor when you're considering what funds to invest in. Instead of focusing solely on Morningstar ratings, you should look at a more important factor: investment fees. Do you know how much you pay in fees for owning an investment? A lot of people don't. This next video could save you over $110,000 in investing fees over your lifetime. I'll show you how to find out how much you pay in fees and how you can decrease that amount.